If you enjoy talking about NIO as much as we do, please click like and subscribe to help grow this channel. And with that, let's get right into today's deep dive.
Welcome back, everybody. Today, we're going to hang out on one specific chart, NIO on March 4th, 2026. Price closed at $4.84, up about 5.45% on the day. Which sounds nice, right? Green day, good vibes.
It sounds nice. Until you zoom out. Because that cute little 5% pop is happening while NIO is still living under some pretty heavy ceilings.
Exactly. Technically, NIO's still in a downtrend, and we can prove it with the moving averages. The 50-day simple moving average is about 4.86, and the 200-day is around 5.25. NIO closed at 4.84, which is below both.
So let's define this in plain English. When we say downtrend, we're not being poetic. We mean price is consistently below those bigger reference lines, especially the 200-day. That 200-day is like the market's answer to, is this thing generally moving up or down?
Yeah, I picture the 200-day as the tide. If price is surfing above it, that's a bull vibe. Below it, like NIO is now, you're still in bear country. And being under the 50-day at the same time says even the shorter-term trend isn't helping you.
And that's what makes today interesting. You've got a stock that's been pushed down, sitting under resistance around 520 to 525, and suddenly it jumps 5+%. Traders immediately ask, is this a real reversal or just a little dead cat bounce? A genuine reversal is different. That's when price not only pops, it actually starts reclaiming those big levels and holding them. So for NIO, that would mean climbing back over the 50-day, over the 200-day near 5.25, and turning those from ceilings into floors.
And we're not there. As of this day, price is still below every major moving average, including the shorter EMAs around 490 to just under $5. So this 5.45% move looks more like a short-term bounce inside a larger bearish trend.
And that's the mindset shift for newer traders. Green candles inside a downtrend are normal. Bears don't push in a straight line, price zigzags. The question is always, is this bounce strong enough to actually break structure, or is it just noise?
That's what we're going to unpack in this episode. We'll use NIO's real numbers, 4.84 close, under the 50-day and 200-day, to show how traders separate nice day from trend change.
And quick reminder before we dive in deeper, none of this is financial advice. We're not telling you to buy or sell NIO. We're walking through how to read a chart, think in probabilities, and manage risk like an adult.
Yeah, this is education, not signals. All right, with that out of the way, let's talk about the indicators that are hiding underneath this price move. Let's start with momentum. One of the first things people check is RSI, the Relative Strength Index. On NIO, one reading has it around 48, another recent data point around the low 40s. Either way, that's neutral, not oversold, not overbought.
RSI basically says, how aggressive has the buying or selling been lately? Below 30 is usually oversold. Above 70 is overbought. NIO, climbing from the high 30s and low 40s up toward the high 40s, tells you that intense selling pressure is cooling off a bit.
So momentum's kind of recovering from being beat up, but not screaming bullish yet. Now, MACD, Moving Average Convergence Divergence, paints a more bearish short-term picture. The MACD line is under the signal line. Histogram is negative. That's a bearish crossover.
Which usually means downside momentum recently picked up. It's not collapsing, histogram isn't blowing out, but it's not confirming a big bullish shift either. So already we've got mixed vibes. RSI neutral, MACD short-term bearish.
Stochastic is the one bright spot. NIO's %K is around 24, %D around 23, and we just got a bullish crossover down in that oversold area. When the fast line crosses above the slow line after being beaten down, traders look for at least a short-term bounce, which we're literally seeing with that 5.45% move.
So think of it like this. Stock is saying, hey, sellers might be tired. RSI says, yeah, but we're not in full-on bull mode. And MACD says, don't get cocky, the bigger momentum's still soft. That's what nuanced bearish looks like.
Now, volatility. Bollinger Bands. Upper around 5.37, middle around 4.94, lower about 4.51. NIO's price at 4.84 sits in the lower half of the band range, about 39% up from the bottom band. Bands are sloping down and not super tight, but not exploding either.
So not a crazy volatility squeeze, not a panic crash. Just a gentle downward channel where today's pop nudges price up, but still under that mid-band, which kinda acts like near-term resistance around 4.94.
Trend strength, ADX, is around 14. Anything under 20 usually means no strong trend. Even though price is in a broader downtrend, right now the push isn't very forceful. Plus, DI and minus DI are almost equal, so bulls and bears are basically arm wrestling in slow motion.
That's what creates choppy ranges. Weak ADX says, don't expect clean momentum trades. Expect fake breakouts, failed moves, a lot of stop-loss tears.
All right, volume. On-balance volume, or OBV, is interesting here. OBV has climbed from about 168 million to over 311 million in the last 20 days. That's a big rise. But it's still below its own 20-day moving average, around 345 million.
Translation. More volume has been flowing in on up days than down days recently, hinting at accumulation, but price is still sliding overall. That OBV up, price down combo is a divergence. Sometimes that means quieter, bigger players are accumulating while everyone else is scared.
But, and this is key, it's a yellow flag, not a green light. Divergences can last a long time. You don't just see rising OBV and say, cool, I'm all in. You wait for price to confirm by breaking key levels, which NIO has not done yet.
So, if we sum it up, one bullish signal in stochastics, four pretty bearish ones, moving averages, MACD, Fibonacci, parabolic SAR, and a whole bunch of meh neutrals like RSI, Bollinger, ADX, OBV. That's not freefall, not liftoff. It's transition, and transitions are messy.
Let's talk levels, because this is where traders actually make decisions. Using that recent swing high around 579 and swing low near 438, we can lay Fibonacci retracements over NIO's move.
The 23.6% retracement is about 4.71. That's your first support zone after this bounce. Price is at 4.84, so if it slips, traders will watch that 4.7-ish area to see if buyers step in.
Next up, the 38.2% level is around 4.92. That lines up with those short EMAs around 490 to $5, and the 20-day moving average near 494. So 492 to 5 is a chunky resistance band.
Then you've got the 50% retrace at about 509, and the 61.8% golden level around 525, which is basically right on top of the 200-day moving average. That 520 to 525 area is like the boss level. Price needs real strength to beat it.
On the downside, below 4.71, you've got that prior swing low zone around 4.38, and even some eyes on the low fours, psychologically around $4. Recently, the 430 area held as important support. Lose that, and people start talking new lows.
So what are the short-term scenarios over the next few days or weeks? First scenario, range-bound chop. NIO ping-pongs between roughly 470 support and 5 resistance. Weak ADX and mixed signals support this. You'd see RSI hang around neutral, stock drift out of oversold without really hitting overbought, MACD kind of flat.
Second scenario, failed bounce. The current pop stalls under that 492 to 5 band. Stock rolls over, fast line crossing back under the slow line, and price slips back through 471. That opens the door to retest 438, maybe even that 430 area again.
Third scenario, stronger push. Price manages a daily close above 492, then above 5, ideally on solid volume. Stock stays bullish, RSI pushes above 50, MACD histogram starts ticking towards 0 or positive. Then 520 to 525, where that 200-day lives, becomes the next real test.
Notice how none of those are "it must moon" or "it must crash." They're if-then statements. If price closes and holds above this band, then maybe we have a shot at the next level. If it loses this support, then we watch the lower zone.
And that's where risk management comes in. In a choppy 470 to 5 range, the big risk is getting chopped to pieces, buying every breakout that fails, shorting every breakdown that pops back up.
One way traders handle that is by position sizing smaller and waiting for confirmation. For example, some will only get directional once NIO closes clearly outside that 470 to 5 box, with volume to back it up. Until then, they assume mean reversion and keep stops tight.
Others might trade the range intentionally, buying near support, selling near resistance, but that still needs rules. Where you're wrong, how much you're risking per trade, and no YOLOing because a stochastic line crossed once.
And all of that is personal process, not a prescription. None of this is a recommendation on NIO. It's a live case study on how to think in terms of levels, scenarios, and probabilities instead of predictions.
If you take one thing from this, a 5% green day inside a downtrend is just a conversation starter. The moving averages, the indicators, the support and resistance, those are the follow-up questions you ask before you risk a single dollar.
All right, we'll leave NIO's chart there for today. We'll keep tracking how this plays out because these patterns repeat across tons of names, not just this one.
Simon, this was fun. Let's see what NIO does with that 470 support and $5 ceiling, and we'll circle back in a future episode.
Deal. Thanks for listening, everyone.
Take care of your money, take care of yourself, and we'll talk to you next time. We are not a financial advisors. The content on this channel is for educational and entertainment purposes only and does not constitute financial advice. Investing in stocks involves risk, including the loss of principal. You should consult with a professional to determine what may be best for your individual needs. All investment decisions are your own responsibility. Take care of your money. Take care of yourself. And we'll talk to you next time.